Hey, good afternoon, everyone. Welcome back to my channel. Uh, the theme of these videos of today we were talking about is the banking crisis, and investing while the market is down, a risk of recession. We may be in a recession right now. The banks going down and the banking crisis. The banking crisis may tip the scales for us to go into a recession inevitably. If we're not in a recession right now, I believe we are currently in a recession. But uh, yes, so the today's video is previous videos I talked about how I'm going to handle it and how I'm going to move forward. But I'm going to spin it and talk about in the minor perspective of new investors or investors in the market trying to find a way and where to go and what investors that I've been doing research are currently doing, where they moving their money to, and just know just give you maybe some advice of where you can just jot down, do your own research to figure out what's best for you and your family. So if that's interesting and if that excites you or pique your interest, like and subscribe to my channel. Share this delicious content and lovely content amongst the masses for everybody because and also remember to watch the video from beginning to end. Hey, it helps me with the YouTube algorithm. Help your boy out. So uh, as we go into C right here, it says Treasury Secretary Yellen says that uh, uninsured deposits will not be protected in future bank failures. So they are already saying, listen, Bobby, looking at this particular article. So right here, Yellen, which is the Secretary of the Treasury Secretary for us, United States, admitted that depositors will be protected. Will not said that not all depositors will be protected over the FDIC insurance limits of 250,000 per account for the customers of the two failed banks. So if you are unsure what's going on, several banks have defaulted. So right here, in these past weeks, SVB and Signature Bank had defaulted, and so and right here, the crypto heavy Signature Bank. Uh, so a lot of these two banks had monies for individuals individuals and companies that are in the tech space and also in the crypto space. And so, as you know, these accounts and customers are billions of dollars, billions, multi-millionaires, billions of dollars. So it's not like small little wigs, individuals that money who are on the line. So basically, all in all, I'm gonna summarize this article. It's saying that and they're willing to help out in terms of because typically the insurance only covers for up to $250,000. So they're saying that they're willing to help out, wink wink, individuals because these are important people just this time. But if it happens again in the future, don't bet on the Treasury to come in to like step in and try to help because in the future, those individuals may not be as important as these individuals. Just saying. That's what all in all what it says. It says a majority of SVB customers were small tech companies, venture capital firms, and entrepreneurs who used the bank for day-to-day cash management to run their businesses. Those customers had 175 billion on deposit with 10 of millions of individual accounts. Told you told you. This already told you that. So venture capitalists, small tech companies, that if they will not have did anything, all these companies have went with under on the water, and it would have been like a huge crisis on their hands. So right here, so it says the U.S. bank regulators announced a plan on Sunday to fully insure all deposits at the two failed banks, including those above the $250,000 FDIC insurance range. So there's they're just right until you right on the wall. They're like, listen, like, we're gonna help out these individuals because they're we link important people to the economy, but don't think that if this happened again, for small wig individuals that may not contribute to society but have paid their money and it's over 250,000. Odds are you may not there's a good chance you won't get your money back. And it says so right here it says, will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Asked Langford. Will they get the same treatment that SVP just got or Signature Bank just got? Yellen acknowledged they would not. Uninsured deposits, she said, would only be covered in the event that a failure to protect uninsured depositors will create a systematic risk. So basically, right here, for any other bank, for individuals that lose their money, will our money be covered? I was at above $250,000. No, because basically Oklahoma, Wisconsin, Illinois, Mississippi, Tennessee, those banks will not. It's not that important because to the overall economy. But these two banks, we're gonna save them because hey, venture capitalists, crypto companies, tech companies, companies that are driving the economy. These are individuals on the West Coast, East Coast, New York, California, uh, who are actors, who are CEOs of tech companies. We're gonna bail them out. We're gonna bail them out. But for Kansas, a Kansas bank, or a bank in Wisconsin, or a bank that's in uh, maybe New Orleans, not so much. Like we're just gonna let the default people lose their money. It's all a sad story. Run. Oh, so unfortunate. We move on with our lives. So that's basically what they're saying. Um, so yeah. So then as you see right here, you see the aftermath and the results of these two or three banks defaults and losing money, bank failures causing a big red day in the market for 3 or 4 days in a row. I lost over like $2,000 and whatnot, and so for you guys, what's the next steps? You see that you probably lost money in your 401k, you lost money in your investment accounts. What's the next step? So, and what individuals now have uh, been doing is they have been seeking refuge into tech stocks. Tech stocks is where it's at. And so right here, I gave you two tech stocks for individuals that people been buying recently, and one is Apple at $155 with a 0.59% dividend yield, and then the next stock where people have been seeking refuge is Microsoft. So people have been like, listen, they've been taking their money out and they've been buying Apple and Microsoft because these two giants, they're two big giant companies. Apple is a oh yeah, right there. Apple and Microsoft are $1 trillion market cap companies, extremely solid and stable. So a lot of people are like, man, forget this. I'm about to put my money into these particular companies and ride it out, right? But most importantly, this also shows the risk of um, right here because banks can default, companies can default, like Enron, or companies can pay a dividend and cut their dividend. Cryptos can scam and whatnot. So what do you do? You can follow a strategy what people have been doing of buying single stocks like Apple and Microsoft, or what people always do, or what Buffett has said, and Bogle and all these other investors is honestly invest into a S&P 500 fund, which spreads your money out amongst 500 different companies. You're highly diversified. You diversify your money, and then also you grow with the market. And then also, if a couple companies in that particular ETF, if they default, if they are not making money, if they bankrupt, guess what? The fund manager is going to take those companies out of the ETF or the index fund and going to replace it with more profitable companies. So instead of uh, taking on all the risk of investing into uh, a single stock like Apple or Tesla, Amazon, or Microsoft, why not just buy the whole market? So well, the whole market is VTI, but why not just buy majority of the market where if you invest your money $100,000, $5,000, $300 per month, people put into VU or VTI, and when the economy is doing good, your money's gonna grow. When the economy is doing bad, like right now, guess what? You're not going to lose all of your money because your money is invested amongst the diversified with 500 companies. It's actually a win-win. And then also, you see right here, for the past 5 years, the money has grown 43%. In the past 10 years, has grown 152%. So you do that, and then and even also with that, with this 5 years, this has been incorporating, because you see right here, it was a big, huge bull market, but then right here, these past several years, well, I mean several years, meaning 2022 was a huge bear market, so the market had went down a lot, and then a little bit of this year as well. We had a positive month in February, but we were down in January. So we were down in January. Uh, Up in February, and then now March looks like we're going to be down again. So overall, but since I would say uh, since whew, 2019, 18, 19, we was in a bull market. And then 2020 we had the whole uh, COVID-19, and then that went down, but then uh, went Ross went back up again by a lot. So instead of uh, taking a full risk of the market and invest in just single stocks, yeah, high risk, high reward. You can just diversify your money amongst the 500 biggest companies in the United States, and have your money be diversified amongst all these different stocks, and you can still have ownership of Apple and partial ownership of Microsoft and Amazon and Tesla, but at the same time, if one day Facebook, like how it was, I think last year when Meta was facing all those different charges and Meta was doing extremely bad, like it was like down for like it was down like negative 25%, and then like Disney was down, and then it was another stock that was like down by a lot. Disney, Meta, and Netflix. Netflix was down by a lot, and guess what? If you would just have bought those stocks alone, just individual stocks, your portfolio will be like in a super negative. But by also buying an ETF, by having those in your particular ETF down negative 25, negative 30%, right? But you got Apple, Microsoft, you got Nvidia, Tesla had did good that year, uh, Google, ExxonMobil, United Healthcare. You got other stocks that's increasing as well. So you should probably have these stocks as a negative, but then you have these stocks. So then guess what? It could be a wash, or you can get you can squeak out a positive increase and whatnot. So it helps with your returns. It helps with ultimately with your psyche, your psychology of basically being able to sleep better at night, having your money diversified amongst 500 companies compared to only one company that you never know what's going to happen. CEO may do some dumb crap, say some dumb crap, like Elon, for example. Great company. I love Tesla, but then he'll say some dumb crap, or he'll say something in regards to politics, and sometimes we'll just dump the whole stock and just frustrate you. So even sometimes just the leadership, you don't have control on the leadership of who becomes CEO or whatnot. So why not just own the entire market or SP 500 index like VU, right? Lastly, uh, what people tend to do is right now as an option is invest into the Nasdaq index, the Nasdaq index QQQQ. Hopefully, I said three Qs right. And then it's the same thing where instead of investing into one different stock, you can own many stocks, right? So the QQQ is spread out for over like 100, 103 stocks, maybe 105, depending on what they did this year. But I'm just give you guys options of basically, yeah, it's great to own individual stocks. I own individual stocks, but at the same time, I also own the broad market of a SP 500 VOO or a Nasdaq index QQQ, so that man to get those returns for me to be able to sleep better at night, and most importantly to diversify your funds, diversify your money. And I rather go on me thinking I could be able to sleep better at night, and I could just buy something and know that my money is diversified amongst several different stocks than, you know, only investing all of my net worth in this one stock. High risk, high reward. Boom, get rich off Tesla. Great, and then you experience a recession or experience a bear market like 2022, and guess what? Now my investment is down -30%. Like what? And then now, how you supposed to get money? How you supposed, now you supposed to sell your investment at a what -20%? Now you lose money. So hopefully that makes sense where to understand what's been going on in the market right now, why everybody is in fear, why everybody's just like taking money out of their bank accounts, and understand why the stock market has been in extreme fear right now, and understand what's going on, what people have been doing, and just wanted to give you guys just an alternative of just uh, a sleep better at night type strategy to help you in this uncertain times, and hopefully this helped. So like and subscribe to my channel, share this lovely, delicious content, and hopefully you guys have a great day. All right, guys.